Thank you, Mandy. Good morning and a warm welcome to our esteemed taxpayers and colleagues who are in this session. We are glad to have you with us as we go through the income tax return filing of the year 2024, step-by-step guide. We hope that at the end of it all, we will have a very successful engagement and you will have imparted value to you as our esteemed taxpayers. Let us please be bowed for a word of prayer before we commence. Almighty God, we thank you for the gift of life and the gift of a new day. We thank you for allowing us to come together with our esteemed taxpayers as we train them on how to file their income tax return for the year 2024. We pray that your leadership and your guidance and your wisdom will remain with us as we start and as we conclude, all to the honor and glory of your holy name. We pray all this trusting and believing in the mighty name of Jesus. Amen. So in the interest of time, I wish now to bring forth our presenter for this session, Benson Muse. Please take the floor. Karibu sana, and we hope for the best at the end of it all. Thank you.
We invite you to post your comments, questions, and concerns related to the income tax return of 2024 in the chat box, and a number of officers are on standby to assist you with additional information as the presentation is ongoing. So feel free to post any question related to income tax return. We will limit it to the income tax return for this sensitization and have future sensitizations on other areas that you may wish to learn about. If you were able to hear us, we've opened with a word of prayer. We've given some opening remarks and the floor is yours to begin. Thank you.
Thank you for that. I'm sorry for that connectivity issue. And I want to take this opportunity to welcome our taxpayers this morning, where we go through the ITR, we call it ITR, or individual tax return filing. I know our taxpayers are in the mood of filing because we are now in May. May is almost ending, and I'm sure when June is here with us, then it will be, it will be marathon. So it is good that we catch up. We just find out what our taxpayers have, the challenges that they may be having, and then we are able to assist them in every way. My name is Benson Muse. As you've heard, I work with our medium and micro and small taxpayer department, and I support our officers in terms of understanding iTax and our business systems, so that again, on your end, or rather on their end, the officers are able to support our taxpayers. Mandy, please confirm if you can see the screen that I'm sharing. I'm logged into iTax profile.
Indeed, Mr. Muse, we confirm we can see, and just to let you know, we also have sign language interpretation taking place. Thank you.
Thank you very much. So I'll not take much of our taxpayers' time, because I know our taxpayers have been filing these returns, some of them for many years. Of course, we may be having new taxpayers, and I'll try my best to see how to try to reach out to taxpayers who may never have dealt with our return, maybe first employed or rather doing business for the first time, and they've never filed their return, and so on and so forth. So the income tax resident return, or ITR return, is a return that the law requires us to file as employees, or rather as people engaged in taxable activities every year. And the law says that you file it by June. Just to simplify the concept, you just file your return, make sure that you file. It doesn't mean you file in June, but you file by June. And that what means is that after the end of the tax period, or rather the tax year, which for this case is 2024, then anytime from 1st of January 2025, you can file your return for 2024 all the way to June. You have 6 months to prepare yourself and file the return. And again, if you've never filed, maybe for one reason or the other, you may not have filed past returns, you also have an opportunity to file them before filing the 2024 return. Just to update our taxpayers is that there were tax laws amendment act changes that came in December 2024, and they affected how our return looks like and how tax is computed when you're filing your annual return. Just to let them know that we have enhanced the system to take care of those changes. It took some time, but at least now we are good to go. And we are monitoring the return and the filing process, so that if there are any things that we may not have captured correctly, then we can deal with them. So if you are a taxpayer and you are not employed, or rather you have no source of income for the year 2024, you just file a nil return. It's very simple. You just go to returns, file a nil return. That's where I'll start. So for those taxpayers of us who are for one reason or the other may not be employed, or they were not in, they did not earn any income in the year 2024, then they can file a nil return, and it can be done through iTax. It can be done through the M-Service app, which is available in our in Google Play Store, and they can also use the USSD platform, which also allows a taxpayer to file a nil return. Specifically, the nil return. Those we have many channels because it's a simplified return to be filed. However, if you are not filing a nil return, let's say you are employed the last financial year, there is a solution that we have two options where how you can file your income tax resident return for the year 2024. You can use the web-based return. We have a web-based return, which means you don't need to download our Excel and file the return. So long as you're able to log into iTax the way I've logged in, I know you can see my screen, you're able to navigate and file a return. The other option now is to use the Excel, and I'll show how I'll explain what the difference. So the first one, if you want to file a return for employment income only, the first option, the web-based return, is available here, and it is written ITR for employment income only. So in case you are employed for the year 2024 and you have no other source of income, this is a return that you can use. It will allow you don't need to download the Excel. You can use this option, and then you're able to file your return. If I maybe if I click it, it will take me to the next step. It will ask me to capture the tax period, which basically is supposed to be the first day of the year to the last day of the year. That is January 2024 to that 1st December 2024, because it's an annual return that you're filing. And then it will ask you, do you have employment income? You just say yes, and then you click next. So this return, the web-based return, or rather the ITR for employment income only, is available to people who only had employment income in the year of income. And it has some conditions. And it does not mean that if you use this option, or rather it doesn't mean that if you are employed, or rather if your source of income was only employment income, it doesn't mean you cannot use the Excel version, or rather you cannot use the Excel option. This is just an additional simplified channel for you to be able to file your return. So if I click next, okay, it's giving me an error, but I can, let me just log out. I can actually use, because I have to demonstrate this, it's very important for us today. So let me log in somewhere where I can, and then I share, where I can demonstrate that. So let me log in and then I demonstrate this. I hope you can see. Mandy, you can confirm, be able to see.
Indeed, we confirm we see the homepage of front office.
Thank you. So this, so let me again capture the details again. 2024 and then 01/01 2024, and then I click next and then next. So the system will populate some information for you, because that is the essence of this return, the ITR for employment income only. The system will populate some information for you, which you can actually verify. And what I want I want our taxpayers to note is that the most important thing for you, if you're using this return, is to make sure that you confirm that you received the credits from your employer. Maybe I can just share another tab here. If you look at this tab shows, let me just share this tab. You're able to see credits. You're able to see credits on the right side if you are employed for the year. So what is important is for you to confirm first that you have credits from your employer for the year of income. So if you look at this taxpayer, for instance, you can see on the right side they have credits. Based on your P9, just confirm with your P9 if whatever you have in your P9 is tallying with what is captured here in the ledger, I would prefer you confirm it in the ledger. There's also another way you can confirm it in the simplified return, or rather the ITR for employment income only. But I would prefer you check in the ledger first. If you're employed for 12 months, you can check whether the credits that you have can count one all the way. You see whether they are for 12 months, or rather you can also confirm. You can also confirm. Again, I've gone back to the filing. You can also confirm from this account, or rather from this interface, how much you are deducted. If you look at section F will show, will go systematically. But before I forget, section M will show you how much you are deducted in the year. So it will show you the amount of pay deducted, and this is basically what is in the ledger. So it is good for you as a taxpayer to confirm that what was deducted from you by the employer is the same information that is reflected in the ITR for employment income only option. Because if you don't confirm that, then it means you cannot use this option. If you find that a discrepancy between, in future will enable taxpayers to amend, but for now, if you find there is a discrepancy between what is in your credits, or rather what was deducted under section M, or rather even what is captured under section F. Section F is where you'll find the gross income, the gross incomes that you were paid for that year. So if you find there's a discrepancy between what you have in your P9 and the gross pay, then it means you need to use the Excel option. This may not be the best option for you, because the Excel will allow you to capture the information as it is, and that is how you will pick it. We will pick it when you file the return. Because if you use this ITR for employment income only with partial information, then it means the data that you will get when you file the return, then it will not be correct. And at some point you may be required to, you'll be required to amend the return. So this one, the ITR for employment income only, is a replica of our Excel return. It has all the fields, that we have in Excel return on matters employment income only. It does not have a place where you can capture business income, because the concept is, this is a simplified one for employed servants only. So if you have business income, this does not apply to you. So section A for this solution, or rather for this option, allows you to confirm your information. And once you confirm the information, then you can actually provide more information as and when it is necessary, or as it is applicable to you. Did the employer give you a car in that year of income? And that means you have employment, you have non-cash benefit. If you are assigned a car that gave you a benefit, and which attracted a benefit to be taxable, you give us those details. So if you say yes, the system will open another sheet for you to capture that. If you had a mortgage, so sometimes there's usually that misconception that it doesn't allow you to capture mortgage. The ITR for employment income only does not allow you to capture mortgage. It allows you, but you have to say yes. So if you say yes, the system will open another sheet for you. If you go up, you can see this section G. It is where you'll capture your mortgage details. If you don't have, you just retain it not selected, or you can just say no. Even this one, you can just say no. And then insurance, life insurance policy. So life insurance policy, we'll cover it into detail when we are looking at the Excel, but it basically applies to any insurance relief that you received, or rather which applies to you, or which you had in the year of income. For example, NHIF. NHIF was also applicable last year for some period. It's an insurance policy. You could be having other insurance policies like medical policy, you could be having education policy, and so on and so forth. So if you have, you'll say yes, you'll tick here, you'll say yes, and then the system will open another section for you to be able to capture the insurance relief. So it will open another sheet, section L, for you, another page where you can capture your insurance policies, all of them, be them affordable housing relief, be it NHIF, post-retirement medical fund relief, or any other that you may have, it will allow you to capture. So it doesn't restrict you by the fact that it's an online return. You just need to say yes here, and then it will open that page for you. Again, if you want income from foreign country, and this is where double tax agreements apply, then you'll say yes, and then it will open that sheet for you to capture income that you earn from another country. Now, if you've been issued with a certificate of exemption, the system will automatically populate for you. So initially, when we started, we didn't enable them to file using this simplified solution, but we enhanced the system, and right now they can actually use it. It will automatically populate the certificate for you, so long as the certificate was issued in iTax for you to be able to file the return. And now once you have said yes to all the relevant places, then the system will allow you to capture each and every one of those sheets depending on what is applicable to you. If you have a mortgage, you capture. If you have life insurance policy, you capture. If you have exemption, if you have other benefits like car benefit, you capture that. And then you go now and confirm in the other sheets. Section F, this is just the information here is auto-populated. You cannot edit this information because it is auto-populated from your employer return. So section F, there is nothing much you can do about it. Of course, in future we are considering allowing you to amend that, but for now it is auto-populated. And the same with section M. Section M will just show you how much was deducted by your employer, amount of pay deducted, and then you reconfirm the same. You check the same against your P9. So actually, much of the work that we require our taxpayers to do is to confirm the details of section F and section M as per the P9. Because again, this does not take away the need to use a P9 from your employer, because if you file the return and maybe you want a refund, we always want to ensure that whatever is in your P9 is the same information that you submit to us in the form of a return, so that we have a proper accounting. And then the other bit now, the other bit, section T, this is where now you capture. I will be explaining these items here under section T when I'm looking at the Excel return. I'll explain them into details. But this is where you capture any other information that is necessary. For example, relief is automatically auto-populated. The 28,800, it is automatically auto-populated. You don't need to type it. And then now you can capture other information like pension. If you are deducted pension during your employment life for the year 2024, this is where you capture the pension amount. You capture it in the last page. Mortgage interest, you can see it is grayed out. This bit for mortgage is grayed out, because the reason it says it's grayed out is because it pulls from that sheet that you will open when you say yes to mortgage income. And also the other information, this one is auto-populated. But now we have post-retirement medical fund. If you have it, you can capture it there for December. But I will explain this in details when we go to the Excel return. And then affordable housing levy, I will explain the difference between the housing levy amount that you'll capture here and the one that you're supposed to capture under relief, and also SHA, social insurance fund. So I'll also explain the difference between what you're supposed to capture here in the last page and what you're also supposed to capture under the other sheet. So with that, I think I will go to the Excel return so that I can explain everything in details as we move. So for those of us who will use the Excel return, maybe we are not, our credits are not sufficient, or rather when we check what is populated is different from what is in the P9, you use the Excel return. So I'll go to file returns, and then I open there, I select resident, and I click next. And then the system will open there. It will give me the Excel return for me to download. So let me download the Excel return, and then I share it, and then we navigate through it so that I can also explain those reliefs and deductions in details as we proceed. So I'll open this Excel return, and then I will share it so that you can navigate through it. So we always encourage our taxpayers, don't use the return that we gave you last year. You know, we have updated it. we have the most current return. So it is always good to use the most current return that we have. So let me share it. Let me share the current. Let me share the return, and then we can navigate through it. Mandy, confirm it is feasible.
I think it's loading, Mr. Musa. Just a minute.
Okay, just share.
Perfect. Now we can see the Excel version 1900.
Thank you very much. So this is the latest version of the Excel return that we have, and this is what we encourage our taxpayers to use. We have it on the website, but we always encourage taxpayers to download it from their account. The way I've just logged into iTax and I've downloaded it, that will give you the most recent Excel that we have. Even if it was updated last night, you'll be sure that we are using the correct return. So we will capture the PIN of the taxpayer as usual. Then we capture the type of return, and then which is original. If you are amending, maybe you filed and you want to amend, you will use amended. But for now, we'll use original. And then you capture the tax period, which covers 1 year, 2024, and then return period 2. Return period 2, 31st December 2024. So there's a question here, do you have any income other than employment income? For now, I will say no. I'll come later to explain that. And then, do you have partnership income? I'll also say no for now. Estate or trust income, I'll also say no. Has your employer provided you with a car? I'll also say no for now. And do you have a mortgage? I will also say no for now. And then we can come later. So, do you have an insurance policy? Let's say no first. Commercial vehicle, let's say no first. Income from a foreign country, let's say no first. And then, have you issued an exemption certificate for disability? You say no first. We'll come to it to discuss that. So, by default, when you download this return, it gives you the minimum sheets for you to deal with. We worked from a basic example of an employee who may not be having all the other issues, who may not be having a disability, who may not be having income from foreign country, they may not be having an insurance policy, and so on and so forth, because not all employees have that. So it only opens you first the sheets that are applicable to employment income. And sheet F is the first one. So if you look at sheet F, sheet F will allow you to capture the income, employment income, as per your P9. So if your employer, so you capture the PIN of your employer. This is picked from your P9. Let me capture it correctly. Name of employer, let's say KRA, and then gross pay. Let's say gross pay is 2 million. So if it is 2 million, you capture 2 million. Allowable benefits from employment income other than car and allowances. I normally see most payrolls will combine all allowances to make. So most P9s that have come through are very simple. You're able to see that it is you're able to see how the employment income is consolidated. So assume the gross pay was consolidated, I'll capture 0 there, and then net value of housing, you capture 0 there. Whatever is asked here, whatever you need to capture under net value of housing is an additional benefit that is not part of your gross pay. Even allowances, other allowances, if they are not included in your gross pay, but if they are included in your gross pay, you just need to capture the gross pay and then you capture zeros in this particular sheets, and then the system will show. It will be able to show you. That information. Now, once you've captured that, so sheet F, as you realized, is specifically for capturing the gross income, or rather without much details, just what you earned in gross in that particular year of income. And then sheet M, we also looked at it when we are looking at the ITR for employment income only. You also required to capture the PIN of the employer, the name of the employer, and then the taxable salary. Now, the taxable salary here is by your P9. Your P9 should actually show either the taxable salary or the chargeable pay. And basically that is your gross pay minus any allowable deductions that you are given in the year of income. Be it pension, be it affordable housing levy, for December, be it SHA for December, and so on and so forth. So it is basically your gross pay adjusted for allowable deductions or rather allowable exemptions for the year 2024, which includes pension for the whole year, of course, up to a limit of, we'll see the limit, how much you can enjoy as pension in the year 2024. We'll see how much you can enjoy as pension deduction. If you have mortgage interest, again, it is also adjusted. So your taxable salary is a portion of the adjustment. So let's say, for example, if this one mine was 1.5 after the adjustments, that is what I would capture. And then in your P9, there's something we call tax payable or taxable salary. So this is basically the tax that you are charged before release. That's how it is. It depends on how your P9 is worded or your P9 is organized. And therefore you need to understand how your P9 is organized so that the amount you capture here, tax payable on taxable salary, it is actually the gross tax payable, before release. Yeah. So if you are supposed to pay, this is basically the gross tax before reliefs. So I'll put like 300,000. And therefore, if you are given only relief of maybe, let's say you are given a relief of 28,800 plus maybe an NHIF of 2055, something like that. So that is basically your reliefs. So whatever is here now is the net tax that you are deducted, because you are deducted. And if you are not deducted, this is what you will be required to pay at a global level. But basically, I wanted to differentiate between sheet D and E for those who are using the exam. Sheet D is a gross tax payable before any reliefs, and then sheet E is after reliefs. Whatever now you are actually deducted after all the reliefs that you are given. And then I go back now to explain something in details, one by one. So we go back to basic information, and let's say we had insurance relief. So let me go to that bit for that section where we have insurance relief. Do you have insurance policy? I will say yes. So when I say yes, the system will open for me sheet L for insurance relief. This is where now I want to explain the reliefs that we have. So the first one, let's say the first relief that you add in the year is a normal education policy from Jubilee Insurance. So I'll capture this. I'll capture the pin of Jubilee, which you should be having. That is how I'll capture it. Policy number, I give it out. It is for my child. So I select my child. And then age of the child, let's say 14. Commencement date, this is based on the rules now for insurance policy. Let's say it is started in 2020 and it will expire 1st of January 2035, just imaginary. And then let's say sum assured is 1 million. I'll just put that. The sum assured is 1 million. And annual premiums paid. Let's deal with this one first. Let's say every month I contribute 5,000. So that is 5,000 times 12. So I'll capture the total annual premiums that I pay. And the system will be able to calculate 15% of this. Now remember, this is up to a maximum of 60,000. Or rather, we still have that cap for insurance relief for 60,000. I'll come to that again. Nevertheless, this is how you'll capture any insurance relief that you have, and the system will allocate 15% of your annual premiums and give you that relief. And then let me go back to another relief. So let me pick, let's say this one for, which one do I go for? Let me go for L. So L, let's say you had NHIF. NHIF. And this is what I want to explain. So I'll just capture the PIN of NHIF there, because it is still applied for some months. And then policy number, basically your NHIF number, that is what you'll capture. And then this one is NHIF. So let me capture NHIF, not any other health policy. And then I say NHIF. And then I capture the policy number, which is basically my NHIF number. I select cell. And then when it comes here now, when we are on section G, whatever we have on section G is basically section G. What we will capture under section G is basically your NHIF premiums for the year, not up to December, because I believe we all know that SHA beginning at some point. So up to that point when we started contributing to SHA, we'll capture your NHIF premiums for up to that particular period. And let me go to the guide that we have so that I tell you how much you will be able to capture for that. Briefly too. So for NHIF, we will we'll declare NHIF deductions that were liable for insurance relief from January 2024 to September 2024. And that is what I wanted, the clarity that I wanted to give. So for NHIF, you will, if you are being deducted NHIF of 1,200, so it's up to September, and that is 9 months. So 1,200 times 9. So that is what you will capture there. And the system will calculate the amount of relief that you qualify for NHIF. So for NHIF, remember we capture up to September 2024, because it was only applicable at that time, up to the time when SHA became into existence. For that time when it was not, after that there was no relief. So there are like 2 months before we got the deduction in December. There's October and November we suffered. There was no relief. So that's how you capture NHIF. And then let's look at another relief that would be applicable in the year 2020. In the year 2024. Okay. So let me capture, what am I going to capture here? Let's go to affordable housing relief. Affordable housing relief. All of us know about it, AHR. So that is how you capture it. And then you scroll all the way. So this one will ask you to capture some amount. So how do you arrive at the amount? Remember, if you look at the guidelines, or rather the guide that we have given on affordable housing relief, the relief was not applicable for the whole year. You know, I know we might have been deducted for the whole year, but the relief was not applicable for the whole. It was not applicable for the whole year, and that is what I want to explain right now. So so let me touch that. Let me just refer to it, and then I will be able to give you the details of how much you can capture. So go to that bit, and then I'll be able to tell you how much you can capture there. A child relief. So the affordable housing relief was given by the was provided for by the Affordable Housing Act 2024, and this was effective from March to November 2024. So it is very good for us to note that. So affordable housing, I know it may not be captured in your PNI, but you need to know how much you are deducted from March to November 2024. So that is the only relief for housing levy that you will qualify. And it was at 15% of your contributions to the fund. So if Benson was being deducted 5,000 every month in the year 2024 for affordable housing levy, what I will need to do is I will need to take my 5,000, that is for March, all the way to November. And that is the amount that I will capture. But there was a capping. There was a capping. Remember, there was a capping of the relief was capped at 9,000 per month or 108,000 per annum. So for those people who contribute a lot of money, they may not enjoy relief on the whole amount. In fact, the maximum you could enjoy for the year 2024 was 1,000 because it is basically 9,000 times 9 months. Yeah, based on that capping. Yeah? But for those maybe who are deducted a less amount, then it is just to take your affordable housing levy contributions for the year. If maybe on flat rate you are getting 5,000, so it would be 5,000 for March all the way to September, and that is for 9 months, basically for 9 months for the year 2024. So you'll put that, and again the system will calculate the relief for you at 15%. So that is basically when it comes to affordable housing levy, you need just to pick what you are deducted from March all the way to September, and then you put the amount here. The system will give you the amount of the relief that you qualify. Otherwise, if it is more than 81,000 or rather more than 9,000 per month, the system will cap it at 81,000 for the year. So for relief, that is how you all of them, NHIF, any other insurance policy that you have, and affordable housing relief that you might have gotten enjoyed in the year of income. Good. So once you capture that, let me go back to the sheet again. I explained something. So in the basic information sheet, there's a place where we could ask ourselves whether we have a mortgage. So let me go there and say, do you have a mortgage? I'll say, yes, I have a mortgage. Then I will demonstrate how to capture that. So when you say that, yes, you have a mortgage, the system will open the mortgage sheet for you. And then you'll put the PIN of lender. If it is KCB for housing finance, that is what you capture. And then mortgage account number, you capture it there. And then amount borrowed, let's say you borrowed 5 million, you build a small house. Amount that's outstanding at the end of the year, let's say you've paid, what is remaining is 4 million. That is what you capture, the self-assessment. And then amount of interest paid. So amount of interest paid is the interest on mortgage, the total interest that you are deducted, not the loan repayment amount, but the total interest that came out of this. Because when you take a loan, there is a principal repayment amount and there is an interest amount. So the interest amount is what you capture. So the maximum that we can give you for a mortgage for the year 2024, let me confirm for you. The maximum that we could give you, because remember again, that is where now I want to come in. That's where I want to come in, so that I can explain this. Where is this document of mine? So let me open this document, then I can explain this. Mortgage. So for mortgage, from January 2024, or rather in December, let me start with December. The amount of mortgage interest that you can enjoy was increased from 25,000 to 30,000 per month. So what does this mean? So what this means is that you could enjoy 25,000 per month, especially those who are paying a lot of interest. You could enjoy 25,000 per month all the way to December. And then December you have 30,000. So the maximum that we could give you, or rather the maximum that you could enjoy for that full year, is actually 25,000 times 11 plus 30,000 for December. And basically that will give you a maximum of 305,000. So let me use the maximum for the purposes of demonstrating. So the maximum you could get is 305 because of the aspect of December. Otherwise, you capture the actual amount. If it is less than 305, you just capture it the way it is, and the system will give you that. So once you've captured your mortgage amount, it will be now, the amount will be netted off because the mortgage is a deduction. It will be netted off from your gross tax, from your gross income, so that you are taxed. The amount that is subjected to tax is less than that. And then lastly, we go to the last sheet. I've wanted to make it simple. Then we come to pension again. So the pension that you are deducted every month is exempt from tax up to a limit of 20,000. And 20,000 was applicable up to November 2024. So again, when it comes to mortgage, to pension, the amount that we can allow you for the year 2024 is a bit higher than what we used to allow for the previous years. So you will find that it used to be 20,000 for the year. It used to be 20,000, but it was also increased to the amount was increased again. The amount was increased again in December to 30,000 per month. So what basically that means is the maximum allowable that we can give you in the year 2024 is not 240,000 that we've been giving you, but you can enjoy up to a maximum of 250,000. Yeah, because it is the amount that we have all the way, and you can see if I capture a high amount, it reduces. Defined pension contribution capture can only be less than or equal to 250,000. So it is just a mathematics that we have done here, whereby we allow you 20,000 every month up to November, but in December we allow you 30,000. So the maximum you can get under the pension that you are deducted every month is 250,000, and this is also an allowable deduction, which will be netted off from your taxable salary. Then I want to mention why we still have we have affordable housing levy in this sheet, why we have post-retirement medical fund in this sheet, and that we have SHA, specifically affordable housing levy and social health insurance fund. The reasons why we have created these two sheets here is for you to capture the amount that you are deducted in December, specifically December 2024. So your house, and because you've seen how I've explained affordable housing relief, the relief was applicable up to September. So the relief, you'll capture it under the sheet for relief. But the amount of housing levy that you are deducted in December, this is where you'll capture it. So if you are deducted 5,000 in December, you capture it like that. Again, for SHA, remember NHIF stopped giving us relief, or rather NHIF stopped being contributed up to in September. I think, yeah, September. So October, November, there was no relief. So you have enjoyed your NHIF relief, you've captured it under the sheet for relief, and then now we have SHA. So any amount for SHA that you are deducted in December, this is where you are going to capture it, specifically for December. And the reason you capture them here is because they are allowable deductions. For December, it was an allowable deduction. For the other months, there were reliefs. Now, once you capture that, you realize that the normal relief is auto-populated. The personal relief, this is where you capture it, or rather it is auto-populated for you for the whole year because it's an annual return. And the system now would give you the amount of tax to pay and so on and so forth. Mine has something to pay because I did not, I just worked out figures. But ideally, if your employer calculated correctly, then you expect to have a negative here or a zero or a small amount that reflects. So every time you find that you have a payable here, when you're filing this return, you find that Excel is giving you a payable, you need to go back, and you only have employment income. You need to go back and recheck your P9, recompute, and see whether there's discrepancy between the P9 that you've been given and what was actually captured in, what you earned in the year and what is captured in the P9. And once this is ready, you just validate the return as usual. So this validate button will give you, it will give you a zipped folder or a simplified file that you can now come back to your account. So now I can go back to my account and then I share. I go back, I share now my account. So let me reshare my screen.
Thanks, Benson. And I know we are tight for time, so perhaps as you work towards winding up, with your permission, I can pose 2 quick questions to you. Though the team has been responding to the bulk of the questions, then we can conclude. Thank you.
Yes, I was just showing them. Once you validate, because the Excel is offline, once you validate the Excel, it will give you a file that now you can come here, you browse it, you attach it here, you agree to the terms and conditions, and then you forward the same to KRA, and then you'll have filed your return. And you'll get an acknowledgement receipt both on the screen, and a copy is also sent to your email just to confirm that you have filed your return for the year 2024. So I think maybe that is where I'll end my presentation. You can pose the questions now. Thank you.
All right, perfect. Thank you very much, Mr. Muse. In the interest of time, allow me to just pose some 2 quick questions. And I think we do have a number of taxpayers who are earning employment income rather, other than employment income. So we have some people who might be earning business income. So there's an interesting question that came at the very beginning. I think that's one of the ones we haven't responded to, as to the figures to be captured if we have an individual operating their business through their APIN and is also registered for VAT. He asks, kindly address what figures to put on the gross income. Is it net VAT or gross VAT? This is for an APIN that files VAT monthly. And then the last question is, there are those employees whose, we have a taxpayer who states that their salary is exempt from tax because I imagine they are working for an exempt entity and perhaps the salaries have been expressly exempt as well from tax. Think your diplomats, etc. How should such an individual file their return? Thank you. Just before you go, Benson, allow me to just also notify our attendees in the forum that this session is being recorded and will be publicized on the KRA TV YouTube channel as early as tomorrow. Perhaps my colleague can confirm the same. So this will be available as early as tomorrow for you to make reference to as you work towards filing your return as early as possible. Benson?
Thank you, Mandy. I think I got the questions. So if you have other income, so you'll just come here, you must use Excel if you have other income. In future, of course, we'll work towards providing an online return also for guys who are having other sources of income. But for now, you just have to use Excel. So you'll have to answer this question. Do you have any income other than employment income? You'll say yes. But what will require you to do, because I'm assuming some of these people may be consultants, you must have a statement, an income statement for the year for that specific business that you are doing. Maybe it's a side hustle, you do consultancy here and there. So you'll be required to have like a balance sheet. You'll also be required to have like a simple accounting statement, income statement that shows how much you got from the consultancy, or maybe if it's trading, how much did you buy, how much did you sell, and what was the profit for the year. So what you need to do, you need to, if not many transactions, you can do it yourself. You can just balance. You can just, if it's commission, maybe one-off payment, you can just capture it where it is applicable. If it's commission, you capture it here. If it is consultancy, you can also capture it under business income. And if you have expenses actually that you can justify, then you can capture them yourself. And even in the balance sheet, you can find a way of balancing it. But if it is something that, it's a serious business, a side hustle, it's always good to seek the services of a professional accountant so that you don't have to pay them a lot of money. It depends on the size of the business, so that they keep records, because everything you capture here, KRA can come and ask for records. So if whatever you've captured here cannot be justified, then an assessment will be done. So you can capture the income. Yes, the income can be seen where it has come from. If it is through a bank account, M-Pesa, and so on and so forth, capture it. But it's always good to have records that can actually show your expenses and so on and so forth. So you just basically have to say yes to other sources of income, and then you'll fill 2 additional sheets. You'll fill this one for P&L, or rather profit and loss account, and then the balance sheet, and then you'll be able to file your return. And there's somebody who has asked about the registered for VAT. Yes, so if you're registered for VAT every month, you file your VAT returns. Maybe you also you file your VAT returns every month, January to December. I would expect that if you're trading with your PIN, maybe you're selling, you are a supplier. Let me use that word. Or you have a shop in town. Maybe you have a shop to sell clothes, beauty products, and so on and so forth, or any other item or commodity. I would expect that you're filing VAT every month, and I would also expect that you're paying installment taxes every month, so that at the end of the year, other than the VAT that you've been declaring to us every month, now you come and say yes to business income, what I've just explained, and then you capture the summary of your transactions for the year in the form of a profit and loss account or income statement for the year. So, and I would expect, of course, if it's a business you're doing every day, unless it is TOT. You see, if it is TOT now, TOT is filed monthly. But if you're in the annual regime, you'll have to keep those records. You file the returns. You file your returns at the end of the year, once the year has ended. So it is the same way as someone else who does not have a VAT obligation, but they have another source of income like consultants, which may not be applicable to VAT, and so on and so forth. So basically that is how you account for it. So filing VAT does not exempt you from filing income tax returns at the end of the year, and of course it is expected you'll have paid some installments, within the 4 of them within the year of income, so that you can also account for them for tax purposes. I don't know whether I missed any other questions.
All right. Benson, thank you very much for that. I think by and large, the bulk of the questions have been responded to. I really appreciate you going into the issue. I appreciate you sincerely going into the issue regarding other sources of income. Oh, sorry, Benson, to clarify the question on VAT, thank you, Mr. Miano, for that clarification, was for APINs. Do they capture gross or net figures? That was the query specifically.
Thank you. I would expect they capture net. That is what I would expect. Maybe something we can take home, but I would expect that they capture net. Because if they capture gross, it means we'll subject VAT to income tax. Yeah, so to expect that they capture net of VAT when they're filing the annual income tax return. Thank you.
Okay, thank you very much, Mr. Muse. Allow me to sincerely appreciate you and release you at this time, just to notify our taxpayers that the rest of us will be here for the remainder of time to respond to your questions, comments, and concerns in the chat. Allow me also just to notify you all that we have an ongoing amnesty program. The tax amnesty program is a great opportunity for you, our esteemed taxpayers, to take advantage of 100% waiver on your existing penalties, interest, and fines. So long as you have no principal tax, you are entitled to 100% waiver on the same. So Mr. Kakuno, thank you very much. We've received feedback from some taxpayers that we should be hosting these engagements as early as January to encourage early filing of the return, and that's feedback well noted. So Mr. Muse, perhaps next year when we call on you, may I request you to honor our invite as well.